You have probably seen the ads of this company recently. They are called Vinfast, and like their name, they are fast too. In 2016, they were nothing. No cars, no factories, nothing. By 2021, just 5 years later, they had an 882-acre factory running, 3 ICE cars launched and discontinued, and a full electric vehicle lineup on the market. Most car companies takes years just to bring one new model on the road. Vinfast did all of that in just 4 years. So how did it start? And why moving so fast? It all starts with one man, Pham Nhiat Vuong. He was born in Hanoi in 1968 in the middle of Vietnam War. His father was in army. His mother ran a small tea stall to support the family. By the time the war ended, the US had imposed a heavy economic embargo on Vietnam, blocking trade, investment, and IMF and World Bank loans. The country was broke, and so was his family. In 1987, Vuong got a scholarship to study economics in Soviet Union. He tried running a restaurant, importing jackets from Vietnam, and selling goods. None of it worked. Then, he spotted something. Ukraine in 1990s was in a financial crisis. The shop shelves were empty. People needed cheap food. So Vuong borrowed $10,000 from his friends and family, imported a basic instant noodle production line from Vietnam, and launched a brand called Mivina. It sold 1 million packets in the first year, eventually expanded to 20 countries. In 2010, he sold the entire business to Nestle for around $150 million. He came back to Vietnam and built a real estate company called Vin Group. Vin Group is not just a real estate company. They have hospitals, schools, apartments, stores, resorts, everything. Basically, the Reliance of Vietnam. Vinfast is part of the Vin Group. By some estimates, Vin Group accounts for about 1 to 2% of Vietnam's entire GDP. Vuong is the majority owner of that company. He is also the richest person in Vietnam. He once publicly said that he doesn't care about accumulating money. He wants to leave something behind. That is a legacy mindset. And it shows how Vinfast has operated from day one. When Vinfast launched in 2017, they didn't spend years quietly developing a car technology. They licensed the core technology from BMW and Siemens. Instead of building it, they partnered with General Motors and hired Pininfarina to design the cars. Speed was the entire strategy. By 2019, they had 3 cars and 3 electric scooters on the market. By 2021, they had scrapped all their petrol vehicles and gone full electric. That same year, they delivered their first electric cars to Vietnamese buyers. So far, this sounds like a remarkable underdog story, but this is where the story gets complicated. In August 2023, Vinfast listed on the Nasdaq in US, but they didn't do a traditional IPO where investors get to see the books and price the shares accordingly. Instead, they merged with a SPAC, a shell company that was already listed on the exchange, which let them bypass the IPO process entirely and go straight to trading. On the day of the listing, only 1% of shares were made available to the public. Vuong held the other 99%. And when a stock has almost no shares in circulation, a small amount of buying pressure is enough to push the price up dramatically. And that is exactly what happened. The stock surged. At the peak, its total market cap hit close to $200 billion. That made it the third most valuable car company in the world, only behind Toyota and Tesla. That same year, Vinfast sold roughly 35,000 cars globally. To put that in perspective, Maruti sells more cars than that in India in a week. The valuation was not reflecting the actual business. Once more shares entered the market, the price collapsed. But who actually bought those 35,000 cars? They sold them mostly in Vietnam, but about 70% of those sales came from Green SM, where Vuong himself holds 95% of the ownership. Now the stock is down more than 70% from its peak, and the company's market value sits below $10 billion. But the stock price is not the most important number here. Every single year since 2021, Vinfast has spent more in making its cars than it earns selling them. In 2024, their revenue was around 44 trillion Vietnamese dong. Their cost to produce those cars was 69 trillion dong, and that is excluding the salaries, marketing, interest on debt, and other expenses. They lost 25 trillion dong just for building the cars. This is called negative gross margin. Most struggling companies still make some profit on the product itself and lose money in other parts of the business. Vinfast loses more money before even it gets to that point, and this loss has grown every year as sales have grown. In 2021, the gross loss was 9 trillion. In the last 12 months, it is 38 trillion. Analysts who cover the stock expect losses to continue through at least 2027. The more cars VinFast sells, the more money it loses. That is the core problem. VinFast entered in India September 2025. They have a factory in Tamil Nadu and are also planning to invest $6.5 billion in Maharashtra. They have two cars on the market and just launched another one recently, VF6, VF7 and MPV7. On paper, the cars are competitive. But in India, paper specs are not enough. At around 20 to 27 lakh, VinFast is sitting in the same price band as Mahindra, Tata, Hyundai and Kia. Every one of those brands has something clear that Indian buyers associate them with. Tata has safety, Mahindra has bold designs. Hyundai and Kia have Korean reliability and better interiors for the price. Maruti means service center exists in almost every district, but VinFast has nothing notable yet. Before the Indian launch even happened, many dealers who had initially committed to the network pulled out. They cited confusion about pricing, unclear product positioning, and inconsistency in VinFast distribution planning. The company quietly cut its first year's India sales target to 3,000 units. For context, Mahindra BE6 had a wait list longer than that within the days of opening bookings. 3,000 units in a huge market like India is not a business. It's a bet that if they stay long enough, something clicks. So do they have anything that can win in Indian markets? And the answer is yes, but it is not available in India yet. They have a battery as a service model where you buy the car and pay a subscription for the battery. This reduces the upfront cost of the car. This can give VinFast an advantage. But until that launches, they are competing with Tata, Mahindra, Maruti without any strong identity. Thanks for watching, and I'll see you on the next one.